Hello everyone, Larry Lavrenjic from Ichimoku.co. I thought we might do something a little different for today, and just going through a presentation that I've prepared for a meeting tonight. And the brief is to examine some global markets from a longer term perspective. And that's what we'll be doing today rather than our daily charts. First market I'm going to look at is the S&P 500, and looking at a monthly chart with the Ichimoku charts. And here we see very solid price action up above each of the Ichimoku indicators, and highlighting that we have a very strong bullish bias in all three time frames. The market trading up above the cloud, above the Kijun-sen and the Tenkan-sen indicator, and supported by the Chikou span, so suggesting that momentum is still to the upside in this market, and we have a very strong market on the monthly charts. Now, if we look back to the previous major bull markets that we've had in the recent past, and we see very similar type of trading activity, with the market finding support at the Tenkan-sen here in the 1990s leading into 2000, breaking through the Tenkan-sen and finding support at the Kijun-sen. But for no time through there had the market, had the S&P 500 been trading through both the Tenkan-sen and the Kijun-sen. The warning here, when we do actually breach both the Kijun-sen and the Tenkan-sen, is a little bit late, but certainly not being long in this market after the breach would have saved us a lot of grief as the major downtrend developed and then eventually breached the Ichimoku cloud. We then saw the rally for another major bull market, trading up through both the Kijun-sen and the Tenkan-sen, and then eventually the Ichimoku cloud, the breakout through the cloud, finding support at the cloud then, and the Tenkan-sen and later the Kijun-sen holding as strong support. The market then breaching both of those indicators, finding resistance then, and that's a common way that we see the markets develop after the Ichimoku indicators are breached. And we saw that here previously in about 2001, the rally back up to attempt to break out through both the Kijun-sen and the Tenkan-sen, and then the market selling off strongly from there. And that's what we saw previously. Then the recovery, the market trading up through each of the indicators and breaking the cloud and giving us this major bull that we've seen. Through this strong bullish market that we've seen recently, similar characteristics to before, the Tenkan-sen holding a support, and through most of this time, except for the very strong pullback that we had in 2011, 2012, we haven't seen the market trading anywhere near the Kijun-sen indicator. So it actually tells us something about the strength of this market, that it is very strong. But a good test of the S&P 500 in the longer term perspective will be the Tenkan-sen indicator, currently trading at 1957, and if we see a bearish close down below there, we will then need to watch the Kijun-sen trading at 1759. Now that is a fair way away, so perhaps if we do then see eventually the breakout down below there, the warning is going to be a little bit late. We can't perfectly time based on these monthly charts, but still the warning will be there, and we'll have something of a warning if we breach the Tenkan-sen, and then a very more significant warning if we breach the Kijun-sen. Now this market could continue trading up, and the Kijun-sen could be at a much higher level and well into the future before we see that break. One thing to look at here, however, is the depth of the price action away from the Ichimoku cloud. And that suggests to me that this market is looking a little overextended and does cause some concern. But there's no indication here at the moment that we are going to see any significant change of trend in the fast and the medium term timeframes. Now, using the weekly charts with Ichimoku gives us a much quicker warning of a major change of trend, and here we see in the 90s leading into 2000 very similar price activity trading up through the Kijun-sen and the Tenkan-sen, those indicators holding a support, and also the Ichimoku cloud coming into play, and the market testing down to the top of the Ichimoku cloud and then eventually the bottom, but the Ichimoku cloud holding solid as support all through that time. Towards the middle of 2000, we saw the eventual breach through the Kijun-sen and the Tenkan-sen, and the breach down through the Ichimoku cloud, and that was certainly the start of a new bear market, with the market then trading down below the cloud. Eventually the recovery breaching both the Kijun Sen and the Tenkan Sen, and then importantly the Ichimoku cloud, and the market trading up on its way. The cloud holding as very strong support up until 2008. The breach down below the cloud, a very significant bear market developing. The breach to the upside, establishing a new bull market. The market then trading up to the 2011 peak, selling off down through the Ichimoku cloud. We didn't trade significantly down through there, but then the eventual recovery and the establishment of the new major uptrend with the breakout up above the Ichimoku cloud. At the moment, the current state of this market is that we are still holding up above the Ichimoku cloud. We're also holding above the Kijun Sen indicator, importantly. And we've only seen one breach down through the Kijun Sen in most of that time since 2013, and just prior to that we did have a breach with the Ichimoku cloud holding a strong support, as we're seeing or we've seen just towards the end of 2014. Now obviously the Kijun Sen is still going to be important to us, as is the top of the Ichimoku cloud and also then the bottom of the Ichimoku cloud. As we move forward, we'll see that if we don't breach the cloud soon, the cloud will actually move higher, and the support level is going to be at a higher level, and it will probably mean that we'll be, if we do have long equity positions, we'll be able to build our positions in a stronger manner before we have an indication to exit those positions. So here we have the cloud as an excellent indicator in that longer term to medium term time frame of the major bull and bear markets. Just looking a little bit closer at the weekly chart here with the Ichimoku charts, and this highlights how important the 2000 level has been recently and is into the future. If we look previously, the market tested around there, just poking through there and selling off in a major way down through both the Kijun Sen and the Tenkan Sen, and eventually finding that support at the top of the Ichimoku cloud, and the buyers coming back in to breach and finally breach that 2000 round number level. Once we breached there, we saw the 2000 level hold as support, establishing new major highs. And then in the recent past, over the past month or so, the market finding strong support just below the 2000 level. And for the prior week's trading, we saw the market just closing below that Tenkan Sen indicator in a strong bearish manner. Now, the next week is going to be very, very important. And if we see a continuation of the trend to the downside, we'll have to watch the Kijun Sen very carefully. 1957 is where it trades, and that could signify that we have once again a potential breakdown in this market, and then we'll be watching very closely down through to the bottom of the Ichimoku cloud if the trend does continue further. Now moving back to the monthly charts with the S&P 500 and just looking at the bands, and this really does highlight how important the bands can be to timing the major bull and bear markets in the equities market here. And here back in the 90s we see the strong bullish price activity up above the upper band then holding a strong support, as was the middle of the bands. The market then trading down through the middle of the bands to find support at the bottom of the bands, then attempt to rally and find resistance at the middle of the band. And that's a typical way that we see the transition from a strong uptrending phase into a strong downtrending phase. We then saw the bearish breakout, the strong bearish follow through, and then the lower band holding as resistance, as we've seen for some time through here in this bear market. Then the recovery, the market trading up through to the middle of the bands, finding some resistance there, and then eventually trading up through the upper band. We didn't see a normal type of transition that we see here, and quite often we don't, but the important thing here that we're looking for is the breakout to the upside or the breakout to the downside. Once we see the breakout, we saw the strong bullish close at this point here, and then we want to see the strong bullish follow through to confirm the transition, and then development of further strong price action, the area around the top of the band and at the middle of the bands holding a strong support, and then eventually the test down below into the bands, well into the bands, as the market's transitioning down into a new downtrending phase. The rally after the breakout down below the lower band finds resistance at the middle of the bands, the bearish breakout, and then eventually the strong bearish follow through, the development of the strong bearish bias, and then recovery with the market trading through into the bands, the bullish breakout, the retest, the lack of follow through there, so we hadn't had establishment of the strong bullish bias at that stage, and then the middle of the bands holding a support, the bullish breakout, the bullish follow through, and the area within the bands holding a strong support. And just taking a quick look at the current state on the monthly chart with the bands, and here we see a bearish candle that's developed, so the seller's taken control, and that follows a weak, very small bodied candle, but still finding support at the upper band, as we've seen the S&P 500 doing for some time, all the way through 2013, 2014. For all of 2 years, the S&P failed to close within the bands on a monthly basis, except for this last month that has finished trading. The first month, January 2015, we've just closed within the bands. So the next month is going to be very, very important to this market. Now, if we see strong follow through, we'll be looking to the middle of the bands at 1887 to hold a support, or then down to the lower band at 1760 to hold a strong support. And what we'll be watching here for is a bearish breakout. Any retracement of the market testing down within the lower section of the bands, if it does find resistance around that middle of the bands, as we see here, and then we see the bearish breakout and the strong bearish follow through, it could mean that this major bull market that we had been in is potentially over. But at the moment, the bull market is still intact, with the market still trading within that upper section of the bands, and very close to the upper band with the close for the current month. Moving next to NYMEX Oil, which has been an important market in the recent past on the monthly charts, and very dynamic over the last 4 or 5 months or so. Prior to that, we saw a congestion area develop. Prior to that, we saw the uptrend in place, and before we can have any types of patterns in place, we have to have the trend leading into them. And this trending price action was established in late 2008, early 2009. The market trading up from that area in a fairly neat uptrend, well-defined series of higher peaks and higher troughs, and then from roughly about 2011 we saw this sideways price action. It's formed something of a symmetrical triangle. It's not quite a perfect one, and the size of the triangle compared to the size of the trend leading into it is probably just a little bit too large. But the important thing here was the solid bearish breakout down below the lower barrier, the close down below the barrier completing the pattern, and then the strong follow through that we saw. And once we saw that close down below the lower barrier, we were able to draw a target. The target was the depth of the symmetrical triangle projected out from the breakout, and we have reached that target just in the last month, and that target here coincides with this rectangular box. Now, this rectangular box is the zone of previous support that the market tested to back in 2008, and it was from down around roughly about 33, 50, 34 up to about 45, and we've just traded down through that 45 level for this month's trading, and we've seen price rejection from there with a decrease in the size of the black body. So even though the sellers have maintained net momentum to the downside in terms of between the open and the close for the month, they've failed to close with control, as we saw for the previous 3 consecutive months, or previous 4 consecutive months, and the sellers lost commitment down around this 45 level. Now, even though the buyers haven't taken control, it is suggesting that there is potential for a change of trend back to the upside, as we saw here. So history perhaps repeating itself. Here we see the strong price rejection with the indecisive candles here. We could see development of price action like this. We could see continued selling down into this zone and the indecision develop, and then the eventual trend. But this is a very, very important level, extending roughly down to about that $34 level. Now, the other thing that occurred when we saw the breach of that lower barrier and the strong close down below there was the breakout down below the Ichimoku cloud, and then we had the strong confirmation that we'd like to see to give us a greater probability of developing the trend to the downside, and we have then eventually seen the market trending down very, very strongly. In terms of the depth of price action, current price action away from the Kijun-sen and Tenkan-sen, just looking a little overextended, not in a major way, but just a little. But at the moment we don't have any sign of a retracement other than the market interacting with this zone and with the sellers losing control and commitment. What we would require next would be a candle with a higher high and a higher low. Now, quite often the RSI indicator can help us with the endings of these very strong downtrending markets. And one of the things that I've noticed with the RSI, and it's just a standard 14 period RSI, is that when we get a triple divergence, and that second divergence that we get is back up outside of the oversold level, and what I like to call a deep divergence, we tend to get a major reaction back in the opposite direction. Now, just looking at the RSI here with NYMEX Oil on the monthly charts, we haven't seen that. We have the market trading down to within the oversold level, and it suggests that yes, this market is overdone, but no divergence here to suggest that momentum is not healthy. Momentum to the downside here is greater than it has been for quite some time, and is certainly not looking unhealthy at the moment. So no sign here that we're based on the RSI that we are going to have any correction back to the upside. But the daily charts are telling us something a little bit different, and here we have an example of that type of divergence with the RSI. And here's the first divergence where the price action is making a lower trough, but the RSI is actually making a higher trough, and then a second time it occurs a second time. And what it's telling us is that the momentum that the market had at this level and this level is not the same as what it was there now. We have less downside momentum, so it tells us that the sellers are not as eager or as keen as they were previously back here. And it's suggesting that the market is ripe for a decent uptrend. Now, the depth of that uptrend is debatable, and we'll have a look at that in a minute. But here, if we look at the trough that's occurred just above the 30 level, this is what I mean by this deep type of divergence, where we have the first divergence here within the oversold level, and then that next divergence above the oversold level, and we tend to get a good, decent reaction following that. And we have seen that for the last couple of days, with the buyers coming in strongly, trading off this 47, sorry, it's not 47, it's probably down around, I think it's 45 or 44, that level down there. But the buyers coming in solidly and breaching in a strong bullish manner through the Tenkan-sen indicator. The first time in some time that we've seen that. And then for the next day's price action, we've seen strong follow through. Now, the problem here for the buyers is that even though they're showing signs of strength, we do have this resistance from this swing high, but also the Kijun-sen resistance. And we saw some selling coming in this candle and has completed trading. And a lot will depend on this next candle, how it develops. And I suggest if we do see a strong bullish close up above here and above the swing high, we could see NYMEX Oil test back up to around the 56 level or even beyond. Now, just going back to the bands with the monthly charts with NYMEX Oil, and here we saw the squeeze going on. So we had an indication that we were going to have some strong downtrending price action all through this period when the market was going sideways, and following the bullish breakout and the strong bullish activity, we saw the market trading to within the bands and finding support at the lower band, breaking out in a bullish manner, but we didn't see the follow through to confirm. We then saw testing down below the lower band, lack of follow through to the downside. The market here seemed as though it might have been setting up for that transition into a downtrending phase, with the middle of the bands holding as resistance. We had the bearish breakout, lack of follow through. Then a bullish breakout, lack of follow through, an indecisive candle, the market finding support at the middle of the bands, waiting for a bullish breakout. We got that lack of follow through at the developed on the next candle with an indecisive spinning top type candle and a black body candle. Then eventually, after another indecisive breakout, we saw the bearish breakout down below the band, and then the strong bearish follow through. That did suggest that we had a very strong downtrending phase in the market in the medium term time frame, waiting for the market to clear this support at 75. That occurred, and then we've seen NYMEX Oil develop very strongly to the downside. In terms of the depth away from the bands here, and especially from the lower band and from the middle of bands, the market is looking overextended. And with the reduction in the size of the black body, it certainly wouldn't surprise to see NYMEX Oil attempt to mean revert, and we could substantially retrace quite a bit of this first time frame downtrend that we've been in for some time. If we do see the market test to higher levels, the first place to look for resistance with the bands would be at the lower band, and that's roughly about 71. And just looking at the weekly charts with the bands, and here we had a nice early warning here of a downtrend in place, with the market trading down through the 100 level, very important area, breaching the lower band. Lack of follow through, but then we eventually did see strong follow through in a couple of candles. We're always waiting for the market to breach the support here around 92, and we did that in a strong bearish manner, and then breached the next support in a strong bearish manner, and we saw the trend just totally fall apart with all of this price activity down below the lower band. At the moment, in this current week, we are seeing the market retrace, and we do need to watch this lower band very carefully. 51.40 is where it trades. We could see strong resistance coming in there and the market congesting. If we see the market breach there in a strong bullish manner, we could eventually end up testing back up to the middle of the bands around the $67 level. Moving next to the Euro US dollar on the monthly charts, and here we see some trend lines and a trend channel that I've drawn on here, and a major trend line here, which may provide some support if this strong selling does occur. A trend line here that was breached to the downside, failing to close below there, and the market trending up on its way. A minor trend line here breached as the market broke out down below the Ichimoku cloud. Prior to that, through this congestion area, we saw the market hovering above and below the Ichimoku indicators, and it suggested a lot of indecision in this market. We then eventually saw a strong bearish breakout down below, strong follow through, the market rallying to the Ichimoku cloud, and the cloud holding as resistance, bouncing off strong support, and then finding resistance once again at the Ichimoku cloud, selling off with a strong breakout down below the cloud, strong follow through down below all of the indicators, and the checker span supporting the bearish breakout with strong momentum to the downside. And then we've seen over the last few months the development of that strong trend to the downside. With this trend line that was drawn, we're able to draw a channel, and it gives us a target here for the downside if the trend does continue further. Downside target very close to 105, probably about 106, 107, and it coincides roughly with support in this region around the 105 area. Just looking at this candle as well, something of an extreme candle. So there is some doubt about whether we will see a continuation of the trend to the downside. If we look back at the recent past, every time that we've had development of these strong candles here, these large black body candles, we've seen the buyers come back into the market. So that's something to be watching for the next month. So watching the low very carefully for a continuation of the trend to the downside, or for the buyers to come into the market. Moving next to the US dollar, Japanese yen, and obviously a very strong market here, trending up in all three timeframes above each of the Ichimoku indicators. Looking at the Kijun-sen indicator, it's pointing up very sharply, reflecting the very strong second timeframe uptrend that the market's in, and we can see based on a series of higher peaks and higher troughs that that trend is very strong. Previously here we saw the bearish breakout down below the Ichimoku cloud and the Kijun-sen holding as resistance. We eventually breached the Kijun-sen and the Tenkan-sen in a bullish manner, and traded up to the Ichimoku cloud, failing to breach there, relaxing there for a while, and then eventually the breakout and the strong follow through, and the Tenkan-sen holding a strong support on quite a few occasions. So moving forward, that Tenkan-sen is going to be important. It currently trades at 111.44, and that will be an important test if we do see selling coming into the US dollar Japanese yen. We also have potentially strong support at the Kijun-sen at 104.18, but it is a long way away, and the market is looking overextended in the depth away from the Kijun-sen and from the Ichimoku cloud. Now, just looking at how the trends develop here with the US dollar Japanese yen, and looking back here, we see the strong downtrending price action, the development of something of a flag pattern, the bearish breakout to the downside, something of a flag pattern again, and then an inverse head and shoulders pattern that formed the breakout to the upside. So we have this nice strong trending action, congestion, trending action, congestion, and that's what we've seen in the recent past. The breakout from the congestion area, the strong trending action, and it looks as though we may be forming congestion once again. So we'll be looking for a further upside in line with the trend being up in all three timeframes, or for a breach below a lower barrier if we are able to draw barriers in this congestion area if it does continue to form. At the moment it looks as though we're forming something of a small pennant type pattern, but that may not continue in that manner. And just looking at the dollar yen in terms of the bands, and we see very strong bullish price action up above the upper band, and looking at how these transitions in the major uptrending and downtrending price action develop, we see the breakout up above the band, the squeeze going on there, the bullish follow through, the upper band holding a support, then the middle of the band's holding a support, the breakout down below the lower band, the middle of the band's now holding as resistance. So important is the change of the bands acting as support and resistance in that transition. Then the bearish breakout, the strong bearish follow through, the bands holding as resistance, then the transition through here into eventually a new uptrending phase, the squeeze going on, which is important, sets it up perfectly for volatility coming into the market and development of the trend to the upside, the market finding resistance at the upper band, then support at the lower, the bullish breakout, the bullish follow through, and importantly up above these levels of resistance, and the development of the trend to the upside. And at the moment still a very strong bullish market in that medium term time frame. If we do see selling coming in, potential support at the upper band at 112.88, and then below there at 105.72. Moving next to the Aussie dollar US dollar on the monthly chart, and here we see very strong negative price action down below the Ichimoku cloud. It's been some time since we've seen price action down like that down below the cloud. The last time was in 1997, and we saw strong development of a downtrend testing all the way down through that 50-cent level. The market then rallying back up through the cloud, and previously we did see the market test down through the cloud, but we didn't see any strong follow through following the breakouts. At the moment we've seen development of three very strong black body candles down through the Ichimoku cloud, so well established trend in that longer term time frame to the downside. A potential target here is the trend line that was set up, and it's trading roughly about 74 or so, and as we move into the next few months it will be moving up to about the 75 level. Important development as the market breached the bottom of the Ichimoku cloud in that bearish manner was also the breach down below the bottom of the channel, and that represented the sellers coming into the market even stronger than they were previously. It represents a large rush of enthusiasm from the sellers, and that was confirmed by the strong bearish follow through of the next candle, and suggested that the buyers really weren't showing any strength in this market, and that the sellers were very, very strongly dominating this market, and that's why we've seen development of this trend very strongly to the downside. Looking at the size of this candle, however, in this last candle, it's quite large. It is something of an extreme candle, so it wouldn't surprise to see some buying coming in, although we don't have evidence of that yet. So it makes the low of that candle very, very important, and if we see a bearish breakout down below that low, there's a real possibility of us seeing the market continue potentially down to the 75-cent level, or down just below to the trend line. Looking next at the Aussie dollar, New Zealand dollar. And this is an important market for Australians. They like to trade this, and very long-term chart going back to 1980, and this chart highlights how important the support roughly down around this region where the market's trading at the moment is. If we look here on 1, 2, 3, 4, 5 consecutive occasions, we've seen the market bounce off this area around the 105 level and extending just down through there recently to 103.50. Each time we've seen strong buying coming in, or moderate buying, then a retracement, and then strong buying. So there is potential for the buyers to come back into this market and trade up to higher levels. Probably important at the moment will be the Tenkan-sen indicator trading at 108.26. If we see a solid bullish breakout up above there, we could easily see the Aussie dollar, New Zealand dollar testing up to the Kijun-sen indicator and trading up to about 115.15. So that concludes this presentation. Just looking at a longer term perspective, something a little bit different than we normally do. Day to day we look at the charts on a daily basis, and sometimes it is good to just take a step back and look at the markets that you're trading from a longer term time frame, just to put things in perspective. Look at those major areas of support or resistance. Look at how the market is reacting to our Ichimoku indicators and the bands, and what they're telling us about that higher time frame trend that's going to determine which way the market is going to be pushed in those daily charts.